1,000 points. The Nifty Bank did well, and the breadth of the market as well was pretty good.
All right, Nigel, thanks very much for that. So that's basically what happened as far as the week is concerned. Well, what might happen next is the question. And, you know, what I'm basically doing is not focusing on the qualitative aspects. It's well understood. The street will watch out for, the infection case curves going up or coming down. What's happening in, epicenters in the US like New York and stuff like that. So all of that, of course, will show up in US markets as well. And then, we'll pick up when we come back on Monday. That is understood. But let's just talk about price points just look at the US, the Indian market first, the US market. And I think that will give us some sense of what has happened so far and what might happen next. So this is what has happened so far as the Nifty is concerned. Basically, from the 12th of February, the Nifty fell 38.7%, right? The low was made at 7,511 on the 24th of March. From that low of 7,511, if you can move on to the next one, it has rallied 21%. Today's close is 9,111. Round about there, 9,098 is the close that I've picked up for today. What happens next? So there are two retracement levels which usually technicians look at to understand what happens after big crash-like situations like what we had in the month of March. One is the 38% retracement from the lows, 38% retracement of the entire fall, and the other is the 50% retracement of the entire fall. The 38% retracement of the fall stands at 9,324. That is basically about 2.5% away. The next 50% retracement will take us to 9,880, which is about 8.5% away. So rule of thumb, watch out for these two levels broadly. You must have heard the market could go up to 9,300. It depends on where you start measuring the fall from, but roughly 9,300 and 9,300 and then 9,900 are the two next levels. Let's now move on to the S&P 500, the US market. There, the market fell about 35.4%. The low was 2,191 on the 23rd of March. From there, we've seen a 25.5% rally. The last close on S&P 500 was about 2,749. So it fell 35%. It's rallied back 25.5%. The recovery here has been a lot sharper. So the US actually has already taken out its 38% retracement level. It is about 100 points above its 38% retracement level, which was 2651. So for the US market, the next level is the 50% retracement. That stands about 1.6% away. It could happen today, in today's trading session when US starts trading. That level stands at 2,795. Why am I focusing on retracements? The reason is this. You can go back to all the big crashes, episodes that we have seen, be it the global financial crisis, or the 1999-2001, or the 87 crash, or you can go back even more. Any big correction has been followed by a very sharp 50% or 60% plus kind of retracement before the next leg begins. The only question is, time is the variable. As I said, if US is the leader and that has been leading the fall and then the recovery, the point is the US market is already crossed the 38% retracement, and as I said, it is about 1.6% away from its 50% retracement level. That could happen today. What next? Does it mean that that market immediately starts to fall? As I said, time here is the variable, is the unknown. It is possible that the US stays here for a while, rallies a bit more, and then, the next phase, whatever that may be, begins once again. So, I just want to leave it there and bring in our guest who's with us to be able to put some of these points to him. Ashwini Agarwal is with Ashmore Investment Management, and he's joining us on the show here on Taking Stock. Ashwini, thanks very much for your time. Good to have you here.
Hi, Prashant.
What's your sense, Ashwini? We've seen a big pullback. I was just talking about both US and India. What next, basically?
So you're absolutely right that this pullback has obviously confounded everyone, because there is still no clarity on when does the lockdown get lifted or what is the course of the virus from here on. The economic situation that will arise from this lockdown will be quite dire, and how much fiscal room does the government have to support the industry? So we don't have any of these questions, and yet we've seen a significant rally from the lows. And that can best be described by the fact that the US obviously led the sentiment, as you said. And the other thing is that I think mutual fund flows have been reasonably robust. ETF selling has come down, from what we can see through data as well as through anecdotal reports from various large institutional brokers that trade on their behalf. So that seems to be driving this rally. In addition to, of course, the fact that in several cases, fundamentally strong companies had fallen to very, very attractive levels. So, it's a little confounding because it's being led a little bit by flows, a little bit by bottom fishing, a little bit by sentiment, whereas the fundamental situation continues to remain quite murky.
Okay, murky is perhaps what we are muddling through right now, Ashwini. Thank you very much for joining us on the show. Good speaking with you this evening. So let's just talk about what the market has done in this murky period. I mean, we've seen this absolutely brutal decimation of the financials. We have seen a huge resurgence in pharma. And now there's some catch up in autos because people, it seems very simplistic. People are going with the basic logic that now shared mobility will perhaps not be as hot and people will go back to buying cars. I just want to understand specifically on pharma and this newfound interest in autos, whether you find it convincing.
So Surbhi, if you'll recall our past conversations, I have been very positive on pharma for almost a year now. And I'm glad that finally that is starting to play out, glad for our investors and our portfolios as well. The logic in my mind has been that pharma has been a huge underperformer pretty much since its peak in 2015, 2016. Fundamentally, many of the companies were trading at very, very inexpensive valuations. If you looked at their local business franchise, you were getting the US export business or the emerging market export business for free. And that was very, very encouraging for us to start looking at these stocks as investment areas almost a year ago or so. And I continue to believe that pharma stocks are reasonably valued. They are not very expensive at this point in time. So the rally that we've seen in some of the names, I think, still has legs in my view.